Okay, so Rakesh Arora, founder of GoIndiaStocks.com, joining us to talk about some of the moves in the commodity space. Rakesh, if I remember correctly, we were talking about metals at the end of last year. And since that point, I was looking at it, right? Copper is up, what, 11% in 2026, aluminium up another 12%. The move today for copper is as much as 7%. Can you explain what is happening here?
So, see, all these commodities which are, obviously started with gold because of the dollar issue that, some of the countries are trying to diversify away from, dollar holdings in their portfolio. So gold was a natural, I would say natural, item to really look at. But, silver has caught up, and now there are so many fanciful stories about, silver usage in industrial and all that. I think demand destruction is one of the lowest talked about points in, base metals and precious metals. When prices move up such, at such a rapid speed, they also become the medicine for what's going to come next. So I think demand destruction is going to be huge, but at the moment we are seeing a short squeeze. You never know where it will end. But from an investor,
Rakesh, are you still with us? Okay, well, I think we might have lost him. Hopefully we can get him back. Why don't we try doing that? Because the point that Rakesh was making is a very interesting one, guys. If you think about it, in any market, if prices go up beyond a certain point, there is demand destruction that takes place. Of course, what we're talking about is base metals, and these are crucial for everything from chips to transmission lines to electric vehicles, and which is why there is the question mark about whether or not these prices are sustainable. They are crucial. Rakesh is back. Rakesh, you were talking about a short squeeze that is currently being witnessed, but how far that goes. You want to complete that point?
Yeah, so what I was saying is that no one is sure, where it will go. But from an investor point of view, I think, these are really high prices and where the returns in future are going to be muted. And so there are two approaches investors can take. One is, probably book profits at regular intervals on optics. Or the other approach is to have a stop loss. But my view is that the stop losses may not really work because when things start to move on the other side, it will also go vertically down. So I think booking profits at regular interval and, trying to reduce exposure would be the best call for at least silver from here on.
Rakesh, Hiral, good afternoon. Asking an investor at this point in time to book profits in a metal rally is like asking the investor to jump off a running train. I mean, that's what it comes across. But, I mean, fair point on that front. One question I have for you is, I was just reading where there has been a policy change that's happened in China where they've abandoned the 3 red lines policy. How important is this? Because what I understood from this is that it does provide somewhat of an upside when it comes to a potential for metal demand, particularly in the short term, but fundamentally things don't change from a long-term perspective. And this probably is one of the reasons why we are seeing this kind of support coming in terms of metal prices in today's session as well. If you could help us and the viewers understand what would this 3 red lines policy abandonment in China would actually mean for Indian metals?
Okay, so I am not really sure about this 3 line, whether it is a new thing, because from what I remember, this is an old concept. And it's nothing which has really come out only recently. This was, I think, introduced in 2020 in August. That's what I can really figure out. And this was about the real estate market. And this was, that they came out with this philosophy that houses are for living and not for speculation. So I'm not sure what this red line got to do with base metal prices. That's number one. But having said that, I think, demand doesn't change that fast. Only the speculative demand is what really is driving these commodities up. And at the current...
on domestic steel pricing front also.
I think we might just lost the line again.
Okay.
So we'll try and get him again.
Yeah, but there are a couple of reasons for that as well. You know, Soumit pointed out 3 reasons for it. I just like to mention this: safeguard duty imposition, and of course a seasonal demand. Rakesh, this is Sharad here. The domestic steel pricing, just to be a bit more kind of giving more perspective to this, that's also on the rise. Will this be aiding the ferrous players going ahead as well?
So for ferrous, the margins are moving up because, steel prices have moved up quite sharply in India. They are up more than 5,000 rupees per ton. The push has come from cost increases because coking coal has jumped up meaningfully, around almost $60. And that's a 3,000 rupee per ton cost increase. So steel companies, buoyed by all the safeguard duty, reinstatement, and the cost push has been pushing steel prices much higher. So for Q4, margins are looking much better than what they're reporting in Q3. So steel companies do have a little bit of, tailwind, and they have been underperforming. So a lot of investors are jumping on those names now because, others have gone up, and these are still, reasonably okay.
Okay.